The truth behind the condo crisis in the metro, the industrial sector's continued rapid rise, and Eastwood's last gem. Prime Philippines founder and CEO Jet Yu now joins us live. Despite the traffic, he made it here. Hi, Jet. Great to have you on the show. Welcome back to Market Edge.
Thank you for having me once again, Mimi.
All right. So I want to start, I don't want to be a party pooper, but I want to start with a big question that everybody's been asking. First of all, are real estate investors facing a crisis today?
Okay. Well, let's start specifically with the condo crisis for Metro Manila. Based on our findings after doing a thorough interview and our research, we've noticed that Metro Manila condo crisis is localized only to a few cities and a few areas. Therefore, it's not really a Metro Manila oversupply crisis. Number two, the real problem is not the oversupply, but the affordability. And there are two things in the affordability. We have to consider, number one, the asking prices of developers, which as of, in fact, since 3 or 4 years ago, many developers has already adopted a very flexible payment term. They've seen it coming and they've adapted well. Number two is the tax reform opportunities. Many of our secondary market resellers of condominiums are starting to notice that they're not making money with their investments. I've received dozens of messages from friends in the industry, from co-brokers, and the problem is the VAT, value-added tax. After you've rented out your unit, it becomes vatable of 12%. And then most recently, as of 2024, the zonal values were updated by the BIR. And it's approximately, based on our scan, it's about 20 to 30% above market value. Meaning to say, for example, near ABS-CBN, and you look at Vertis North, a condominium by Avida, the zonal value right now is 220,000. But another condominium beside it, which is by Alveo, has the same zonal value at 220,000. But in fact, Avida, being a lower tier condominium, is actually selling at lower in the secondary market. And of course, it's affecting the net profit that investors are getting. That's why you see a lot of sacrifice sale in the market by condominium resellers.
Jet, we do have some graphics here. Probably you've touched on this one. You did mention 10-year average selling prices per square meter, for example, from 2015 to 2024. For the mid to low segment, this is the 20 to 30 square meter size, it went up 302%.
Yes.
72,000 to 218,000. The upper luxury segment went up by 296. Essentially, more or less the same, right?
Yes.
Now, if we flip to the next graphic, so you can see the selling prices going up, the rental yields are going down. Why the distortion? Is this the way it's supposed to be, or should the selling price and the rental yields be going up together?
Okay. First, let's say we can say that 10 years ago, 2015, or even actually 2011, 2012, you can get even sometimes a 10% rental yield in condominium investment. Those were the good times, the golden era of investing in condominiums. But in fact, globally, 2 to 4% is not bad. Okay, it's generally acceptable. Okay, so the reason for this normally in any progressive cities or nations around the world is that the metro CBD areas usually will get a lot of interest from investors because of the rapid rise of developments. And the locals eventually gets pushed out to the fringes. It's happening in Canada, in Toronto, in Vancouver. It happened to Spain, in certain cities in Spain. It's happening globally. But this also shows us that the rapid rise of those condominium prices has become too fast, I'd say, for the past 10 years. And therefore, right now what we're seeing is just a correction. It's part of the cycle.
How long will this cycle last, this corrective phase?
Yes. So the cycle would depend primarily on the demand. Who will take over the demand? So right now what's interesting is the government is introducing a lot of, I'd say, never been done before tax reforms for an investment policy, such as the 99-year lease. If you open that up, 99-year lease in certain investments, then definitely you expect more expats coming into the country, and that would fast-track that correction.
All right. You did say earlier that the crisis, the condo crisis, is localized. So could you give us the geographies where the crisis actually exists and, places where the condominium segment is doing much better?
Yes. So when we heard about the news about this oversupply crisis, our
34
research team,
months
34
worth
months
of oversupply,
Yes.
and that's not counting the ones in the pipeline, in the middle of construction.
That's correct. And I think that the reason why, after hearing that, I asked my research team to go a deep dive and look into the data. We've noticed that certain cities, for example, like Manila, Muntinlupa, Las Piñas, and Pasay, have areas mostly were vacated by POGOs, experience a high vacancy. Okay, but in areas where CBDs like Makati, BGC, Ortigas, in terms of take-ups by sale, yes, there is a slowdown, but I wouldn't say it's because of oversupply. Again, it's primarily an affordability issue.
Okay, so is it time to do price correction, you think? We do have a graphics from your team about household incomes. If we could just flash, there you go, monthly average family income. When you talk about affordability from 2015 to 2023, from Metro Manila, the average family income went up by 21%. Across the Philippines, a little bit higher, 32%. What can we get? What do we do with this number? What do we do with this data?
I think what you can notice here is that the decentralization effort of the government for the past 2 or 3 administration is working. You see that the average income for outside Metro Manila has grown faster. Than Metro Manila. Number two,
that's also coming from a lower base.
Yes, that's correct. That's correct. And number 2 is the rise of the condominium values of 300% versus the 20 to 30% that you see in this chart, which makes condominiums a lot less. It makes the Filipino dream more impossible to reach. Okay, and that's why, again, 3 to 4 years ago, developers has already adapted to these flexible payment terms to make it more affordable, to make it more appealing for investors to buy. And I pointed out, and I always point this out, that there's really a tax reform opportunity because the 12% VAT and the 6% capital gains on a higher zonal value and not on a market value is really affecting investor confidence. And this is something that what we see is that we need to address immediately, because even if developers offer longer flexible terms of 60 months, we're seeing 60 months for pre-selling condominiums. But if investors know that after the condo unit is turned over to them and they will eventually face another sacrifice sale, then it wouldn't make sense to invest in this kind of condominium. You look at Dubai. Dubai now, they're attracting so many of our high net worth investors in the Philippines because they're getting yields of 7% on rental yield and a capital value appreciation of 7 to 10% year on year. Because how? They're offering very attractive tax policies.
Yeah, but tax reforms, that will take a long time. You can't do it instantly. So in the meantime, what is the advice to investors? Maybe someone who's watching, holding a condominium near this area, what do you tell them?
Well, if you can hold, you hold.
Hold until when?
Hold until the market is completely back. Remember, real estate is a cycle. And actually, that's why I said that it's localized, and it's not. You cannot say that Metro Manila as a whole is in a oversupply crisis, because Metro Manila in general, the condominium market is stable. There are a lot of infrastructures, for example, in Quezon City, subways and MRT7. They're opening a lot of stations around Quezon City, and the prices of those condominiums are stable. And that's why you cannot say that it's oversupply for the whole Metro Manila.
All right. But here's where you see opportunities. Bright spots are seen in the industrial segment. So walk us through why you're bullish about the industrial segment. Actually, everybody's bullish about the industrial segment.
So globally, there's a strong play in the industrial sector since the pandemic started and post-pandemic.
For warehousing and logistics, cold storage.
That's correct.
For food security.
Yes. So The industrial sector since 2020 has grown tremendously. Last year, the total supply is only around 37 million. As of 2024 of December, it's already at 40 million based on our, yes. And the demand has grown to 1.3 million plus square meters. And where are we seeing most of these demands coming from? Number one, logistics. Because of the growth of e-commerce, it is necessary for these e-commerce players to be able to serve the more than 7,000 islands as much as possible. And these logistics players are expanding in key provinces and areas around the country. And the biggest problem that we're facing now is the lack of at least grade B or grade A supply of warehouses. And that's why last year, we saw a turnover of around, a completion of around 700,000 square meters of build-to-suit logistics facilities that were turned over last year.
All right. I think we have here. We're actually flashing the map here. And to wrap it all up, I wanted to ask about Eastwood's last gem. What is it and why is it special? What's happening to that gem?
Yes, thank you, Mimi. Right along Eastwood, the most prime area, right beside Eastwood City along C5, the St. Pio Church, a renowned church with many followers and devotees. The owners are now opening up the whole land for development, for the future, to shape the landscape and the skyline of C5. So this opportunity is about 1.5 hectare. It's the last gem that's available, who's actually willing to sell and offer to the market. So if you look at the C5 corridor, even the Ayala development there by Park Links, its take-up is very good. And that's why I always say it's the market with the Metro Manila oversupply, it's localized. And Eastwood is actually one of those good market for condominiums. So this opportunity is the last piece, about 1.5 hectare, and our team was tasked to become the exclusive advisor to look for a joint venture partner or a buyer for this property.
How much is the rate in that area?
Currently, our asking rate is very reasonable. It's only 250,000 per square meter. And you can build up to 40, 50 stories high, which you can bring down your accommodation value. So for developers, the accommodation value that they look at, it's going to be very, very reasonable for them.
And you said it's 250,000 per square meters. If you look at the C5 stretch, is that considered cheap? Where is the Ayala?
That's correct. Ayala is about less than a kilometer away. I think about 800 meters away.
How much is
the land there? They're not selling, but last we checked around 2019, somewhere around 350,000. Yes.
See the potential there. All right. I want to end with this, Jet. Final question. We've always known you as Mr. Prime Philippines. This is your baby, right? This is your passion company. How did you get into the property sector? Is your family into construction? That's why you're into the property consultancy space?
My family, real estate has always been in our, I would say, in our DNA. My mom and dad, they've been in the low-cost housing, affordable housing, a lot of pag-ibig housing
under what brand?
Marketing. They're a partner with under Dragon Estate, which is a partner of Moldex. Yes. So then I ventured into the commercial real estate space, okay, which I started about 11 years ago. I was 23 years old. I was just starting, and I happened to be, in a space where this a lot of exciting things are going on.
Exciting times ahead. Thank you very much, Jet, for the insights, the look ahead and the look back, because we did get a few questions where you're coming from. I know it's Moldex, something related to Moldex, but thank you for clarifying that. We'll see you soon. Thank you for the insights, and good luck.
Thank you so much, Mimi.
All right.